The oil benchmarks, Brent and West Texas, both fell more than 5% after President Trump called off what he said would have been the biggest attack since World War II, after Crown Prince of Saudi Arabia rang him up and said, "Please don't." This was the 22nd move of more than 5% in the oil price since the war began at the end of February, so nobody's getting too carried away with optimism. The share market certainly didn't, basically closing steady with falling miners offset by rising retailers and banks. The Korean market dropped about 5% today, but that's not a terribly rare event either. And the Australian dollar held above 70 US cents. Now, the main interest on foreign exchange markets is the soaring yen, which has led to a 4% drop in the Aussie dollar yen rate in the past few days. It's happening because the US and Japanese governments are intervening to prop the yen up, which has been declining for years. Japan has tried many times to stop it falling without much success, but this is the first time in 30 years that the US has joined in the effort. Now, the house price correction in Melbourne and Sydney is now 5.5%, down from the peak, and quite a bit more in some suburbs. So affordability in those places, as well as Canberra, is definitely improving. Not so much in Brisbane, Perth, Adelaide and Hobart so far. And the national decline of 2% is a mere blip at this stage, due entirely to the 3 interest rate hikes in the first half of the year. It's the 9th time rising interest rates have brought down house prices since 1980. The question before the House, as it were, is whether supply and demand can be rebalanced so prices don't rise again when interest rates come down, which is usually what happens. And that's finance.